All right, welcome back to the final round here on Yahoo Finance. Miles Udland with you in New York, and we're joined now by Jay Bryson. He's the acting chief economist over at Wells Fargo. And Jay, we've seen a lot of data come in since the last time we spoke. So as we look towards a jobs report in just about a week's time, 9 days from right now, as you see things, given the data we've gotten over the last 6 weeks or so, what's your reading, I guess, on the state of the U.S. economy and the progress we have or haven't made after it seems like things bottomed out in April, but have we come as far perhaps as the markets might suggest?
Yeah, I mean, to Miles, to your point, I mean, it does look like we did bottom out in April. I mean, if you look at retail sales in May, it's up 17%. Industrial production starting to move back higher as well. And then, of course, employment as well. We are not back to where we were in February, and it's going to be a very, very long time until we get back to that level. So, the unemployment rate, which is double digits right now, is probably going to remain there, for a few more months longer. But, we are making progress. We are moving in the right direction. It's just that the level of activity is just not back to where we were in February. We shouldn't expect that anytime soon.
And so, two questions to follow up there. Where have you put your second quarter GDP guesstimate at this point? Because I think you were in the it might decline at a 40% annualized rate camp for some point in time. Has that changed at all given the data we've seen? And have you changed your view on what growth might look like in the third and fourth quarter based on incoming data we've gotten so far in April and May?
Yeah, so right now, as you put it, and I think this is the strong word here, guesstimate is, we think we're looking at an annualized rate of decline in the second quarter, 35, 40%. I mean, it's just unprecedented, right? But conversely, you get a pretty big bounce in the third quarter of about 25% as things start to, open back up again. But, again, I want to put this all into context, and the context here is, most people, when you talk to them, they don't know what GDP is, they don't know what the growth rate is, but they really focus on is the labor market. And so if you say to most people, okay, so the unemployment rate in the third quarter is still going to be roughly 10%, for them, that's still a very, very bad outcome. And so, again, the growth rate, the delta, if you will, is positive here, but we're just not back to where we were, a few months ago.
Hey, Jay, going off of that, I mean, it's interesting because when you take a look at the rise in the number of cases and the potential that we could get another shutdown or another possible stay-at-home order, I mean, that has been being floated. But then there's also this other case that, hey, maybe we won't get new lockdown orders, maybe this new waves of coronavirus that could potentially weigh on consumer demand, also business confidence. I guess my question to you is, how do you see that playing out? How big of a worry is that in terms of the possible resilience or lack thereof of the consumer? And then how are you forecasting, or I guess including that, I should say, in your forecast?
Right. Okay. So it's based on an assumption, and our assumption is we don't think you're going to see a generalized lockdown again, like 41 states locking down like we had in April. We think governors will be under tremendous pressure not to do that. Now, I'm not saying that individual states couldn't lock down. I'm sitting here in North Carolina. I'm not saying that Governor Cooper could lock the entire state down again. But, again, to get back to a 41 state lockdown, I think that's very unlikely. What you will see most likely would be individual sorts of counties and hot spots, things of that nature. That does create a challenge in terms of what we're trying to think about here as we go forward. If you see a lot of different counties or big metro areas having to lock down again, clearly you're not going to have the growth rate that you would otherwise. So when I talk about a 25% annualized rate in the third quarter, I mean, the confidence interval around that is very, very large. It really depends on how this virus evolves and plays out, and our response to that going forward. And obviously none of us really know how that's going to work out.
And Jay, of course, some other updates out of DC and out of Trump's office is this H-1B visa ban, at least for the remainder of this year. And of course, coronavirus might have been a really timely excuse in many ways for the administration to make this sort of move. How do you anticipate this having a long-term impact on our not only competitiveness, but having an impact on the bottom line? As we know that 3/4 of the H-1B visa holders, at least in the United States, they fuel Silicon Valley. They're hired by tech companies that have been really driving growth in the United States for some time.
Right. So, I mean, if we're talking about a visa ban between now and say January, and then it gets relaxed after that, that doesn't have, I don't think, major long-term effects on the economy. But if we're having this conversation 3 or 4 years from now, and we still have a visa ban in place, that will have some long-term competitiveness negative effects on the U.S. economy. So, short term we can get by with it, but if this becomes the new normal, if you will, where we aren't letting people into the country with these visas, then I think that's a long-term negative for growth in the economy.
All right, Jay Bryson, acting chief economist over at Wells Fargo. Always great to get your thoughts, Jay. Hopefully we can talk soon.
Great, thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.